good morning. Welcome to VSA Capital 5-Minute Morning Miner. It's Friday, the 8th of August. I know in some ways it feels like it's been a long week, in some ways it hasn't, but it's the summer and it's all a bit quiet, and the weather's going to be glorious this weekend and all of next week. So, what are we doing working? Well, I know we're trying to earn a living. Paul, morning. How are you?
Good morning to you as well.
Very good. Right. Actually, I'll tell you what, Paul, maybe you can help me out as well as maybe a few listeners. What's all this Swiss gold bullion tariff or whatever? I don't totally understand it. Can you explain it at all?
Well, I don't totally understand it either, but I can give you a few details around it, that's for sure. This is an announcement by the Trump administration that the gold bullion from Switzerland will be tariffed or subject to additional tax, if you want to call it that. The key point around that story is the fact that most of the LME qualified bullion that is traded around Europe and specifically from Switzerland to the USA under the qualified refineries is actually refined in Switzerland. So it's an automatic punishment or a penalty on trying to trade bullion bars that are refined in Switzerland. Now, Switzerland itself also, as far as its general tariff, has been set by the Trump administration as of yesterday at 39%, which is one of the very highest among all of the countries in the tariff rounds of announcements so far. So it means that any gold that's going to move in and out of the United States in a bullion state is probably going to need, have a little bit of a price advantage from refineries elsewhere in the world. And there are a number of them, but it does change shipment flows for sure.
So it's basically just giving the Swiss a damn good kicking, but probably won't affect the gold price.
Well, it has affected the gold price in the short term. It moved it about $40 an ounce here, up close to 39 or 4,000. So, but whether it has any real long-term impact, only on the Swiss refiners, I'd say.
Yeah. Okay. Well, we'll watch this space and see. You never know with Trump, he turns things around sometimes as well, almost overnight. Let's quickly, we've got one corporate reporting. Premier African Minerals have updated us again on the Zulu project.
Yes, that's right. Second phase of the FAT plant test run commenced on schedule, and they do say that the plans are progressing with two remaining plant issues requiring longer-term solutions, and they're not quite sure whether or not they would have to do some of those solutions, but that's the part about this second round of testing is to deal with. Again, the off-takers have representatives on site as well during these test runs just to see how what they decide will work best, I think.
And a lovely site it is too, I can tell you. Anyway, right. What else? Anything else you want to talk about, Paul? You can talk about a few things totally at your discretion.
Yeah, this sales deal by Equinox Gold selling off the Nevada operating assets that it acquired from Caliber Mining in that merger. That would include the PAN operation, which is a operating sediment-hosted heap leach mine, also the adjoining deposit, which is only a few kilometers away, as well as the historic producing property that Caliber had called Illapah, which is a little in central Nevada as well. $110 million deal, of which $90 million is to be paid in cash. As a result, Minera Alamos, the acquirer, has opened a bought deal of fundraising for that 110 million in order to raise the necessary funds for that. Total value of the deal $115 million. For Equinox, it gets a cash deal for assets which are now undersized or non-core to its ongoing strategy for them, as they're dealing with construction on two projects now in that merger, which are quite a bit bigger by total annual output. And for Minera, it stabilizes their cash flows and working capital position, which had been a complaint of their own shareholders the last couple of years as their Mexico heap leach initiatives have not been able to deliver sustainable production as of yet.
Okay. Anything else?
Wheaton Precious Metals also is London quoted as well. The big royalty company put out their Q2 results, and it was record revenues here, $500 million in Q2 on revenue, and net earnings came in just shy of $300 million. The balance sheet also has a lot of cash on it with no debt at all, and $1 billion in cash and another $2 billion in credit facilities. So they're in a real good position to do deals. Two of their royalty properties came into production during Q2, adding to their cash flows, and that's going to continue here at this point with a 9.5% increase in total gold equivalent ounces produced to just shy of 160,000 ounces.
Look, I mean, royalty companies in mining and credit companies in mining, they're actually often the safest way to play mining longer term. You don't get quite the same equity gearing, but it's safer at certain parts on the Lassonde curve, isn't it, basically, Paul?
It is, and they also have shown the best, or the what would call the safest and most consistent shareholder returns over time too.
Yeah. So, yeah, you should always bear that in mind when looking at mining. If you're interested in mining credit funds, do give us a call. We're very involved there. All right. Thanks, Paul. That'll do. Everybody enjoy the weekend, and we'll be back next week.
Thank you very much.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.